An NYSE-listed BPO company, Genpact, has come out with strong fourth quarter results. Revenue is up 29.6% at $442.7 billion, and net profit has jumped up 32.8% at $61 million. To talk to us about the earnings, we are now joined by MD Tiger Tyagarajan. He's President and CEO of Genpact. Mr. Tyagarajan, thank you so much for joining us on NDTV Profit. How has the business performed in the last quarter, given that HCL Tech and TCS have clocked good growth in BPOs?
We've performed well, as you just started off explaining. We had a great fourth quarter, and I think it's a continuation of the whole of the 2011 year, when we beat all expectations, whether it's revenues, adjusted operating income margin, earnings per share, as well as great cash flow for the year. So, you know, in a turbulent economy with volatility and uncertainty, we feel very good with our performance through 2011, ending with a great fourth quarter.
Mr. Tyagarajan, margins have barely expanded this quarter. Are you facing pricing pressures? What's keeping a cap on margins?
No, actually we are not. We're not facing pricing pressure. Pricing is competitive, whether it is the IT type work that we do or the business process management work that we do. Pricing is competitive, but it's not any undue pressure. In comparison to the fourth quarter of last year, there are really two big things. One, in the fourth quarter of 2010, we actually drove a number of cost actions in order to control our costs, as some of our projects were getting delayed, and this was fourth quarter of 2010. But more importantly, in 2011, we were actually investing in the business, and we've continued to invest through 2011. We actually continue to invest into 2012. Front-end sales teams, client-facing teams, deep domain expertise, new product innovation, new centers in Brazil, new center in Dubai. So a lot of that drove our investment decisions, and we had planned for these. So our margin for fourth quarter and for the full year is exactly as we had expected it to be. In fact, a little ahead of what we had expected it to be at the beginning of the year.
Is the slowdown in the US and the worries of sovereign debt crisis in Europe affecting your business?
Not directly, Anisha. In fact, we characterized the world in 2011 as being volatile and uncertain, and we continue to believe that that's the world we are in 2012. A lot of our clients are saying that their world is uncertain and volatile, and that's a reflection of two or three things. It's a reflection of the fact that Europe continues to have its ups and downs. It's a question of waking up in the morning, reading the newspapers in New York and saying what's happened in Europe. And the second is, from a revenue perspective for a lot of our clients, they really can't predict how much they'll be able to grow. And sometimes when they do see growth, they don't know if it's going to continue. So it's volatile. But, that sets the stage, interestingly, for someone like us to really partner with our clients, to really do two big things. One, transform the way they run the company, which is how do you variabilize costs more? And that's a big dialogue we're having with a lot of them. And the second is helping them drive revenue growth. A lot of our analytical work that we do is around revenue growth, is around segmentation, is around pricing, market share, sales force effectiveness. And of course, the world is full of risk and regulation, so a lot of the work that we do in analytics is also risk and regulation. So while, yes, the world is volatile and uncertain, it actually throws up a bunch of opportunities for us.
Right, you spoke about regulation. US President Barack Obama has proposed, tax disincentives for companies that take work abroad, that outsource. What's your take on the US protectionist policy?
It is, we believe, Anisha, that it's more important to focus on, what's happening with the economy, and therefore what impact it has on, for example, unemployment rates in the US, which have remained a little stubborn, and therefore what it means to job creation and what it means to companies being able to make some tough calls. I think those drive ultimately decisions in the medium and long term. There are some sensitivities around moving work, and there are some sensitivities around what it does to the community, which some companies actually take care of. But in the medium and long term, our view is that it's economic growth and its economic imperatives that will drive decision making in companies. Will tax rate changes change the way companies think about where service needs to be delivered from? Yes, but we need to really see that come through, and in the form and fashion it will come through before we can really comment on it. I can tell you that a lot of the growth that we've had is also in onshore services. So while we've grown the company very nicely in 2011, some of that has been driven by complex onshore services in mortgage, in healthcare, in risk, in analytics, in re-engineering. Our US staff has increased pretty dramatically during 2010 and 2011, and we expect that to continue as we go forward.
Right. Your clients that you bill between $1 to $5 million have grown the fastest to 121 from 64 on a year-on-year basis. Are you facing hurdles in gaining big-ticket clients?
No, Anisha. In fact, if we think about 2011 and compare it to the last couple of years, it's actually very similar. What happened in the down cycle in 2008, 2009 was that deal sizes did come down. And it's remained there for some time now. We haven't seen deal sizes go back up. I think that's one statement I would make. But it's not a reduction in deal cycles, deal sizes that has driven that $1 to $5 million. It's really two things. One, we have smart decision services, re-engineering, analytics, and risk kind of work that we do for clients that often starts with the initial $500,000, $1 million, $2 million relationships. And that's new logos that we win that are in the $1 to $5 million category. The other is where some of that work starts as initial pilots that we deliver great outcomes on, and that quickly migrates from the $0 to $1 million relationship to the $1 to $5 million relationship. And we've seen a lot of that in 2011, and that's a reflection of great service, fabulous net promoter score, which is at an all-time high for us, which is really customer satisfaction, and therefore a lot of cross-sell wins for us as we bring them a range of services and they choose one, then they choose a bunch of others. And that's how we've grown to that $1 to $5 million customer relationship number, which we feel great about because some of them will migrate to $5 to $20 million and $25 million and above kind of categories.
All right. Wishing you all the very best for 2012. Thanks so much, Mr. Tyagarajan, for joining us on NDTV Profit and sharing with us details of the numbers posted by Genpact for the last quarter in 2011. Moving on.